Good evening to all of you. Yes, a warm welcome to Ahmedabad Management Association and to this special program on stock markets. Well, when it comes to stock markets, we Gujaratis obviously are the ones who are attracted to it. And then when the speaker is a Gujarati, the wavelength matches. Definitely we want to hear from one Gujarati to another. Let me introduce to you this man of the stock market, Mr. Hitendra Gujarathi. I will read out his credentials, which will tell you his specialization, his speciality, and what he is going to give us today in terms of knowledge. Well, it is my privilege to introduce to you Mr. Hitendra Gujarathi, an expert in the stock market. In both fields, that is, fundamental analysis and technical analysis. So here is a person who is an expert. He is into active equity and derivative trading. This he has been doing for the past 8 long years. And this is his full-time activity. So you can understand what he is going to give us in terms of knowledge about the stock market. He is one who has been doing continuous research in future and option segment of the stock market to develop proven strategies. So his strategies are going to help us over the next, you know what I want to tell you. Well, this is probably his 5th lecture at Ahmedabad Management Association. He himself is an electronic engineer and a cost accountant too. He has been working and is a recognized person from Chartered Wealth Manager from the American Academy of Financial Management. Previous to entering into this field, he worked full-time into information technology and has more than 26 years of experience there. But as we all Gujaratis are wanting to do business, so this is what his chosen field of interest and business was. That is where he came back to his roots, Gujarat. He has been head at HP. As a global director, he worked in Computer Sciences Corporation situated in Hyderabad. At HP, he was based out of Bangalore. But yes, Gujarat, the roots pulled him back, and he is here for the last 4 years, based in Ahmedabad and doing what he loves most, the stock market player. I would request you all to join your hands together and offer him a warm welcome. On behalf of Ahmedabad Management Association, it is my pleasure to welcome him and present him to you to take forward this session. Sir, welcome to Ahmedabad Management Association. The stage is all yours.
So let him set up these things. Prior to that, I want to tell you, 2 friends, Jayesh and Amit, are close friends. Jayesh started doing trading in stock market, and he learned technical analysis. He has run a lot of books. He went through official training. He started doing trading on technical, based on his knowledge on technical analysis. And he actually invested something like 10 lakh rupees to begin with. And in less than 4 months of time frame, Jayesh made around 2.5 lakh rupees. So he was feeling extremely excited. He called his close friend Amit. his he called his close friend Amit and shared the detail with him. Amit was all gung about it. Oh, what a great news! You mera yaar hai yaar. That's good yaar. Something superb that you have achieved. And he was saying, superb yaar. I am so happy for you that you have achieved such a good success. You've done it in a planned manner. Very good, very nice. What Jayesh told him, I've learned technical analysis. Now I know how the market operates. अभी मार्केट मेरी मुट्ठी में है. आई नो एवरीथिंग अबाउट मार्केट. अभी तो ये बिगिनिंग है, ये शुरुआत है. देखो आगे होता है क्या. तू एक बड़ी बड़ी पार्टी के लिए तैयार हो जा. विल ऑल्सो गो टू बैंकॉक, डोंट वरी. So this is the kind of word that Jayesh is told Amit. Now ladies and gentlemen, precisely these words are dangerous words. The conversation that he had with his close friend is a dangerous conversation. And why it is so? It's a response of an immature and indisciplined trader. And at the end of the session that we have today, I will ask you people that what should have been a right response of Jayesh to his close friend Amit. What should have been his right response? We'll actually, and in my discussion today, you will find that what should have been the right response. And you'll be able to answer that question. So that's my objective. Like, where is that? Big take. So before I start, good evening to all of you from my side as well. Yeah, I think let's be louder now. Good evening all. Good evening. Right. So thank you, Francis Lobo. Thank you a lot. I didn't start that way deliberately. Okay, so thank you. And thank you, Ahmedabad Management Association, for again providing an opportunity to interact with an August gathering like yours. Great. Okay. This is a typical story of a stock market trader. What happens? Somebody learns the stock market, typically technical analysis part. He enters in the stock market thinking that he now knows a bit. And he probably experimented a lot in terms of paper trading, maybe some back testing, things like that. He has done all those things and he ventures in the stock market. He has very high aspiration, very high hope of making large amount of money. And that's why he is coming to the stock market. And once he enters into it, okay, then he starts actual trading. When he does actual trading, he initially gets some amount of profit. He feels very excited about those profits. And then what happens is that he starts believing in himself, saying that what I'm doing is absolutely perfect, right? So he commits himself more in terms of the position sizing that we call. He actually increases position sizing. And again, probably to some extent, because he was right, he got some even more profit. So maybe he's making profit continuously for 2-3 months time frame, okay? Then he has completely overconfidence. And what does he do? He actually commits even much larger amount. And then he takes a very large position, ideally speaking, beyond his risk appetite. And what happens that when he does that, the stock market shows its true color. And first of all, he starts seeing what you call a red on the screen. That means he first time sees the loss on the screen. Because of his past, what you call successes, he is in a denial mode. He's saying, no, nothing. I mean, my analysis is perfect. What I've done, I earned so much of profit. My analysis is perfect. And there's nothing wrong in what actually the position I've taken. So that position becomes loss. Loss increases to some extent, but he doesn't do any action. He doesn't take any action. Now, what happens? He believes that his actions are still right. So when he's already in a loss-making position, he actually commits more to the same loss-making positions. And for 15-20 minutes, he goes away from the screen. And what happens next is that all the 3 months profit that he has in one trade, the entire profit is wiped out. That has come as a loss to him. Now the real panic starts in. The real fear starts in. Okay? So he is completely confused what to do next. And then when loss gets bigger and bigger, he closed the position. And he says, my analysis was wrong, that he confessed at that point in time. And say my analysis was wrong, so what he does, he has actually initially bought it, and market went down. So is the market anyway going down? Let me do one thing. Let me sell a lot. So he sells a lot of things. And finally what happens? Market goes up. And during this process,
his capital, which started depleting earlier, is completely exhausted. And what happens is he is completely frustrated, disappointed, and he actually quits the market, blaming the luck, blaming that market is not fair to him, all kind of stuff, right? This is a typical story. People might be saying, this is a known story. Why are you repeating this? We are all learned people here. Why repeat? But this is set the context of my actual entire discussion today. This is a starting point. This set the context. Why it is so? We want to avoid the situation, right? We want to ensure that such situation don't happen. That's very important part, right? And this exactly precisely I'm going to talk about today. That how do you prevent this situation to happen? And what is that is required to be done for that? So what is the status here? First is there is an entry, then there is a trading, and then there is exit. What you want, that we want to be in trading all the time. Once you enter, remain in trading. Let me assure you, if you have survived the future and option trading, technical analysis trading for more than 4 years, you are probably going to become a successful trader. If you cannot survive 3 to 4 years, it's very difficult. If you are not playing it well, in 3-4 years, market will actually absorb all your capital and ask you to go. So our idea is what? Our idea is to remain in trading all the time, and we don't want to get exited from the market. That's very important. If you want to exit as a plan, as a voluntary thing, then it's fine. But not a compulsion, forcefully nahi hona chahiye. Jabardasti nahi hona chahiye. It may be voluntary, that's okay, but forceful exit nahi hona chahiye. That's very important. So exit we don't want. Now the question here is, why so? The scenario that I described, why that is happening? That's a fundamental thing that we have to understand. The reason that happens is that you go into the market after learning charts. So you may know Fibonacci, you may know indicators, you may be doing moving averages. So all those things on which are there in technicals, you will actually learn and actually perform. You might have understood how to operate the charting software. You might have understood how to operate the broker's given software, all the features of it. So these are the important things that you actually learn and then plunge into market. So what you need basically are technical skills, which is absolutely primarily required. But the very important part, the technical skills are necessary, but not sufficient requirement for you to be successful trader. And in addition to technical skills, you need what you call non-technical skills as well. And this is where the focus area for today that we have. The non-technical skill that we need to have, and that is where I'm going to go into detail. So which are the non-technical skills? Treat trading as a business. Trading has to be seen as a business. If somebody is doing trading as a hobby or a part-time, I think it is not meant for him. It's a very serious activity you are plunged into. It is a very expensive hobby to have. So please, if you are doing it as a hobby, please stop it. It is an unaffordable hobby for any of the person, whether he is a billionaire or trillionaire. He cannot afford this hobby. So very important. You have to have a detailed knowledge of stock market operation, how stock market really operates. That detailed knowledge you need to have. And as we go into detail, you'll realize that how much detail you need to know about all these things. Then you need to develop your own strategies before you really plunge into it, and count return on investment on each of those strategies. Which strategy are you are comfortable with? Which strategies are very comfortable as per your personal style and personal strength? That is another aspect that we have. Then we have to plan the trade. Before you enter into trade, you need to plan the trade, and exactly you trade as per the plan. That's another aspect. And the next aspect, the trading is the boring, monotonous process. If you make it more boring, your chances of success are much more. If you feel trading is an excitement world, you are at a wrong place. It is not at all exciting to do trading. Trading is a boring process. It's a very boring thing to do. But anybody who's finding it exciting is because probably he's a newcomer or he doesn't know much about the other aspect of trading. Trade management, active trade management is very important, very significant. Then we also have money management. Then once you trade, then you have to record those trading and review your operations, and finally looping the feedback. So whatever you do, you need to give a feedback back to your own business plan that what I have done. Now, very important thing, we are talking about two skills here. One is technical skill, other is a non-technical skills. A pass mark in technical skill is good enough to be a successful trader. But if you want to be a successful trader, you need to get first class with distinction mark on non-technical skills. It is very, very important. People fail. The story that we initially seen, the first slide, where person has failed, he got completely frustrated, he left the stock market because he was not having a distinctive mark or whatever, he was not even aware about the non-technical factors which are so important to become a successful trader. Now, treat trading as a business. So let me ask you, if I want to start a business, what are the important things that I have to keep in mind? I want to start a new business. What are the important things? Anybody? You have to have money first, right? Agree.
Full-time dedication.
Full-time dedication.
What kind of business?
What kind of business?
Earnings.
Earnings.
Ability to market,
Ability to market, right?
irrespective of anything.
Yeah. Strategy. Okay. Anybody else from the backside? Yeah. Risk-taking abilities. Good.
Capable staff.
Capable staff. Planning and patience. Okay. Planning and patience. Consumer base. Right. So good. I think all the input that you've given me are absolutely valid. There is no doubt. But the way I put it this way, when you start a business, you need to have a vision. You know, any business you need to have vision. If I'm doing trading as a business, I should have my vision spelled out. If I don't have a vision, it's meaningless to do trading. So I'm sure that most of the people don't do that. The very important thing, you need to have your vision. Typically, let me explain what vision. Vision is a 60,000 feet statement, but it is a very precise statement. It is not a vague statement. For example, if I want to start a business of a Chinese restaurant, okay, so what I will say as my vision, that the restaurant I'm going to start will be the best in class in entire Ahmedabad, so far as Chinese restaurants are concerned. This is my vision statement. The vision statement is actually an agenda setting. It tells you what to do at a very high level. Then you have what you call the next is a mission. The mission is that you actually, to achieve the vision, what you do to achieve the vision. So it is again a higher level statement, maybe at 40,000 feet, but they are broad statement. What will you do to achieve this thing? For example, for the example of a Chinese restaurant, right? I would say that to achieve this, I will first of all choose the best in class location, which is hub of restaurants. I will choose the best in class restaurant. I will hire the best in class, chefs, right? So these are some of the mission statements which are part of your thing. Again, mission statement may be 3-4 lines. It is not something very big. It may be simply a maximum of a paragraph. So anybody has read annual report, most of the companies actually have the vision statement in the annual report and the mission statement as well. So like in trading also, it's very important that you have vision and you have mission. Then you need to have goals. Now goals are actual deliverables. Goals are what you call something that you will achieve to fulfill the mission and the vision, both the things. So you need to have your goals. Goals are deliverables, as I mentioned, and goals could also be laid down some of the principles. Like I worked in HP, Hewlett-Packard, and that company started from a small garage. And you'll be surprised to know those two gentlemen, Hewlett and Packard, when they started the company in even when $100 billion company. Okay, it became $100 billion company, and it does statement. Hello, now it's okay. So once the company start generating cash, it has to have a policy to distribute the cash. So like most of the company have what you call a dividend distribution policy, right? What does dividend distribution policy specifies? That how much portion of my profit I will give away as a dividend. How much of that I will maybe use for buyback. How much of that I will give as a bonuses. So these are what you call dividend distribution policies. So when I start a trading business, I need to have my profit policies also in place. These are very important things, right? Now, the next thing that I wanted to highlight, that trading is a full-time business. If you feel that it can be done part-time, forget, it's not possible. Because trading is not complete. It is not that you are sitting on the screen that is a trading. No, trading also requires, like you, in any of the other business, you do market research, you do market feedback, you do a lot of study, you go for the, what you call the technological upgradation, so you know what kind of different technology available, what kind of process technology is available. All that thing you do. Similarly here, the post-market closing, you need to think, need to really study, need to understand a lot of things, and that's a full-time job. It's not possible to do it part-time. Let me tell you that. If you're doing it part-time, my sincere suggestion, please stop doing it, or employ a CEO for doing that job, or you can outsource to people like me. That you can do. Okay. Now what can be vision? Now these are typical statements. These are not vision that I'm saying that you should have. But when I start a trading, why we trade first of all? Why do we trade first of all? Anybody? Why do we trade? Why you want to trade first of all? For? Yeah, to earn money. So right. So my objective is to earn money. But then when I say my objective is to earn money, my vision is to earn money, it's slightly vague. So you need to specify what kind of money you want to earn. And when, sorry? To become a billionaire, right, good. So you have to start with a trillionaire, so you become billionaire. No, I'm just joking. That's not my point here, right? So yes, that's a very good vision. I want to become billionaire, and I think that's well said. And I've said in one of my other talk that why all of you don't have that kind of vision. I want to become billionaire. But to become billionaire, what you have to do? Who are the billionaires today? People who have been in the business. Is there anybody who a professor is billionaire? No. Is there anybody like what you call a social person is billionaire? No. Right? A business person, they are all business people who are billionaire. So first of all, if you do trading, you are in business, so you have potential to become billionaire. So at least the first step is taken. That's good. Now here, when we say I want to make money, you need to specify as a vision what kind of money. So one of the vision statement tells me that I want to make high double-digit return per annum return. So maybe I want to make 70, 80, 90% return per annum. Or somebody might have vision that I want to make 200, 300% return per annum. So these are the specific vision statement that you should have. Now somebody who has actually left the job and started trading, for example, person like me, right? So now, what is for him, what should be the vision? First of all, if he is employable, okay, a person is employable, then what are the annual salary that he can get? I think he is foregoing that salary. So your trading has to at least give me that much, plus something more, the 25% return on your capital and the employable salary. So for example, somebody who's earning say 50 lakhs per annum, right? And suppose he brings in just 10 lakh capital. So how much he should make at a 25% kind of vision? He has to make 52.5 lakh. What is the return expected? It's 525% per annum. Is it possible? It's not possible. I can't achieve that. But it's not possible. At this point in time, it doesn't seem to be possible. So one has to be very, very careful about making vision statement. It has to be realistic also. That's another aspect. And the other thing, like for example, somebody who is with a capital of say, somebody who's employable with say 5 lakh rupees as annual salary, and he brings in 50 lakhs as a capital, right? Then 5 lakhs and 25% of 50 lakhs, which is around 12.5 plus 5, 17.5. So his return is somewhat justified. It's possible to achieve those returns. Mission. Now mission, when I say mission, you need to find out how I will achieve this vision. So somebody might have said, I will do equity intraday trading to achieve my goal, to achieve my vision. Somebody might say, I will just do long-term options, buying and selling, something like that, and I will achieve my vision. Somebody will say, okay, no, I want to do index future selling or buying, and I will achieve my vision. That is your choice, but your vision statement has to be clear. Your mission statement has to be clear. What is that you will do to achieve your vision? That's very important. Then goals. As I told you, it is very, goals are also laid down principles. You will follow certain principles to ensure that my vision is met. So goals are, you set your goals. Like for our trading purpose, some of the goals can be like this. That I'll make sure that any trade I take, the risk reward has to be 1/3. That means if I'm likely to lose X amount, I must take the trade which gives me 3x as a potential profit. If that trade is not there, I will not take the trade. That's my goal. That's my principle of operation. That's very important consideration. Then I don't lose more than 2% of my capital on any one of the trade. That's another goal you could have. Then the most important part of your goal setting should be that I'll be consistent in my performance. Many of the people would know that there are many blue chip companies in India, right? We call them blue chip companies. So why they are blue chip? Anybody on that? Sorry? Yeah, they are consistent performance. And very important that if you achieve consistency, then only you be able to really generate good return. If you are not consistent, there is no way you can do this. So many of the companies, what happens if, for example, some companies are available at a price earning ratio of 3 and 4, right? Why so? Because what happens is they will generate 100 crores profit 1 year. Second year will say minus 200 crore, third year 50 crore, fourth year minus 35 crore, fifth year something like 130, 40 crore. So who will believe this company? There is no consistency. That's why they trade at a price earning ratio of 4, 5, 6. Nobody is really willing to buy those companies because there is no consistency. On the other hand, companies which demonstrate consistency are trading at a very high PE multiple. Classic example like Asian Paints, for example. Consistent performance for years and years and years under all adverse situation, under all kind of situation. So consistency is another important aspect that we have. Now, if your review period, that means when I review my operations, every month if I review my operation, I should not lose more than 5% of my capital for that particular review period. These are some of the goals that you can keep in mind. Now, if I lose 3 consecutive trades for any reasons, I lose them, I will only operate after I have actually analyzed all the reasons and now I have complete mitigation plan in place. That I know what went wrong and now I am aware about what I should do now. So then only I'll take the trade. Now, other thing is on a given day, some good day, suppose you made a 6% of your profit, and these figures are variable. This is, you can choose your figure. I'm just giving an indicative figures here. So 6% of your capital has a profit. If you made on a single day, you should stop trading. Unless the opportunity that comes is a 1/5 ratio. That is 1 risk, 5 reward. That kind of. Now trading capital. So I would make a statement that initially I'll bring in 10 lakh capital. These are all statements. This is something somebody can bring it 1 crore, 100 crore, doesn't matter. But somebody will say, I will start with 10 lakh and if I consistently perform for 3 months, I will increase my capital to 20 lakhs. Right? So these are the basically trading capital. But let me tell you, given the current scenario that we have in India, particularly on NSE stock exchange, any capital less than 10 lakh is not worthwhile attempting. It's not. Even 10 lakh is slightly stretched on lower side. But then it is not worth attempting. Profit policy. The last part that I just said about the business. What should be my profit policy? Right? Somebody will say, because see what happens is, whenever you do some work, you need to be rewarded, right, back. So I suppose I made a profit in 1 month time on say 20 lakh rupees capital, I made a 2.5 lakh rupees profit. I should get rewarded to some extent. So maybe I will do like one of the person can have that 50% of my profit, I will put in long-term stock buying. So I'll build up a portfolio of that. Somebody might have said I'll put in mutual fund to build a big corpus later on. Or somebody said I'll simply put in fixed deposit or bank fixed deposit. So it's sort of a diversification that you have. But you have to decide this upfront. The point that I'm making is you should have this planned in advance. If you don't have such plan in advance, let me tell you, it's going to be extremely difficult to really do trading and to be a successful trader. Okay, now detailed knowledge of stock market. This is the big task, let me tell you. And I don't know how many people really know all the things that I mentioned, and all of them, how many people know that. So first of all, you trade, so you need to know what are the trading opportunities you have. So trading opportunities are there in index and stock future, So these are trading opportunities you have. Then you have trading opportunities in index options, you have trading opportunity in stock options. So these are different options you have. So first of all, you should know how the index is formed. What are the constituents of index and what are the different weightage of the indexes has. So those things are very important, because if you know that, then you will know how the index will behave based on some of the input that you get. So those things you should be aware about. Then you should also know what are the different options are available, for example, to take the trade. Suppose I do future and option on stock future. Stock future I do trading, then I know that there are 3 contracts available. I should know about different expiry date and those things. Then you should also know about the margin requirement. If I take a trade on a particular options, what kind of margin I need. If I take a trade on say stock future, what kind of margin I need. If I need and then you should know about the market lot. What is the market lot there? Okay. Then other thing is how many you also should know what are the liquidity available within that particular trade instrument, the stock future or index future. What are the liquidity available? Those things you should know. What is the impact cost? That means if I buy 1,000, whether I'm able to buy at the same price that is quoted right now. You may not be able to. So what is the impact cost? Is it that I have to buy 5 rupees more or 10 rupees more? So there are different impact costs available to that. Margin requirement, as I told you, and mark to market losses, all these things you should be aware about. Then the stock market, what you call their announcement itself are very critical. Sometimes they change the rules of the game. So you should be aware about. So for example, you might have open position on a very profitable trade. Okay, let's say one of the stocks that you profitable trade. Now stock market has announced that there is open interest is full on this. It's complete and no more additional position can be taken. So you are in a profitable position. If you are not aware about this, you might close the position thinking that it will, when it will go down again I'll buy, but you will not be allowed to buy again. So you actually lose a profitable winning position. You will not be able to enter again. So those things you should be aware about. The SEBI announcement you should be aware about. Then you should also aware about the other cost involved. Right? When you do a business, any other business, you know what are the taxes are available, what kind of regulation requirements are available. Those things you have to comply with. That all these things you are aware about. So here also you should know about the SEBI charges, the GST, the STT. It's very complex. 6 to 7 charges are applied when you do a trading, right? And what percentage are applied, that all that you should be aware about. Open interest, market-wide volume, put call ratio, the advanced decline ratio, all these things you should be aware about. And I'll give you one of the classic example on if you are not aware about how much money you can lose. I've got an example for you. Other things are also which you can read through, but these are the point that I'm making is that when you do a business, like I just gave a classic example of classic Chinese restaurant. I need to know about the restaurant business per se in Ahmedabad. I need to know what are the customer preferences are. I need to what kind of taste they like. I need to know what kind of ambience they like in the restaurant itself. Right? Those things are very important. So similarly, you should know about the environment in which you operate. This is a battlefield for you. So you need to know detail about the battlefield. So this is what I was on. Now, let me give you a classic example of this example. One trader has taken a position in Bank Nifty option. Okay, now the position he has taken is, he has bought Bank Nifty 27,800 strike call. He bought 50 lot. Each lot is 20 shares. So he bought actually 1,000 shares. He bought at just 5 rupees. He bought at 5 rupees. And Bank Nifty on the expiry closed at 27,820. Okay, so he was right in his call. He has taken at 5 rupees. Actually now he is entitled to receive, he has paid 5 into 1,000, 5,000 rupees premium he has paid. Now he is entitled to receive back 27,820 minus 27,800. That is 20 rupees per share is entitled to receive back as a premium. So he is entitled to receive 20,000 rupees as a back. So he is supposed to have 15,000 profit without other cost. So he'll be very happy. Oh, I made a profit, 15,000. But when his contract comes, he will get a shock. He'll be surprised and he will get a big shock in his life. What will happen in contract? He will see that he has incurred a massive loss of 25,748. Now, if you don't know the stock market operation in detail, these are the kind of mistakes you will make. What happens here is that when you buy a call option and when you don't sell it in the market itself, then the stock exchange exercise your option. So it actually effectively buys Bank Nifty at 27,800 for you and sells Bank Nifty at 27,820 for you, 1,000 number of shares. And when you do this is called exercise of the option. the STT applied on this is 0.125%. Otherwise, STT applies is 0.0017%. But in this case, STT applied is 0.125%. You see, use STT is applied. So the STT norms are like this. If you are not aware about these operations and the way stock market functions, you will end up, despite being correct, you will end up making loss. Right? Many of the people who probably do option trading will realize that the stock options which you have bought, its intrinsic value might be 80 rupees, but you have to forcefully sell it around 60 rupees because there won't be buyer more than that price. Even though intrinsic value is 80 rupees, you have to forcefully sell at 60 rupees. So those things that you should be aware about before you plunge into the trading, and that knowing about that is very important. Now the next topic about developing the strategies. So let me tell you this. I was telling you that the stock trading is a boring subject, and I hope somebody is getting boring, right? So it has to be boring, and because see, anything that you try to earn, when you try to earn money, it's really boring. किसको अच्छा लगता है ऑफिस जाने का, कैसा कमाने का? Nobody likes it, right? But you enjoy going to cinema hall because there you are not earning, there you are spending. The spending always exciting, not earning. That's why I'm saying if you find that trading is exciting game, you are actually there to spend, not to earn, right? So now what are the possible strategies? So you can do index future buy sell, you can do stock future buy sell, you can index stock future calendar spread. Anybody is aware about calendar spread? You are aware about calendar spread. You can sell the next month future and buy current month future, or vice versa, what it is. What is your call? Is it called a calendar spread? Or I sell the call option of next month and buy call option this month. Or I buy the call option of weekly expiry and I sell call option of monthly expiry. So these are all calendar spread that you have. This is called calendar spread. Then option strategies. There are huge number of strategies available. I have my own bespoke strategy which I have developed over years, which are very specific to myself, not written anywhere else. And those strategies are there. You can have naked call put buy. You can covered call put buy. So these are different strategies, right? So you have to develop your own strategy or choose your own strategy, right, to actually achieve your vision that you have. So these are some of the things that you have. Some people may simply do, no, I want to do intraday trading using equity only MIS, the one that you have, right? Or somebody say, I'll do only day trading. I don't care about monthly and all that. Or some other people may do arbitrage trading, right? So those are also important. In the previous example that I just gave you about knowing the stock market operation, one thing which I forgot to mention is that you'll be surprised to know sometime the future price is at a very heavy discount to the equity pricing. So for example, let's take a stock X is available in equity segment at 2,000 rupees, but actually its future price will be quoting at 1,850 rupees. So now if you don't know why it is happening this way, you will be put into trouble. It's because sometimes company announce a huge dividend, and the future price is not going to get a dividend. The person who's holding equity is going to get a dividend, and the dividend declaration or the record date is before the expiry. The future price person is not going to get a dividend, right? So he has to discount that price, and that's why it is the lower price. So you should be aware about all these detailed aspects. Similarly, the case with the bonus, right? The future price will be a half if 1/1 bonus is announced. Similarly, the case with the rights share, the future price gets discount. And generally what happens in the month of July and September, the future price remains in discount. The reason being that most of the companies which are there Nifty 50 or in Sensex announce dividend during July and September. So these are some of the reasons that you should be aware about in operation. Arbitrage opportunity. Now, as I was mentioning to you that somebody say, oh, it is the future is available at 1850. There is a great arbitrage opportunity, right? I borrow the stock from somewhere and sell it in the market and buy future. He will make a mistake. You need to know the operation. The arbitrage opportunity is where, what is arbitrage opportunities? It's a risk-free trade. It's a guaranteed return. Arbitrage opportunities are guaranteed return, right? I don't want to go into detail, but arbitrage opportunities are rare, and at the same time the returns are very low. They're not very high. But somebody may choose that as an option because it's a risk-free, right? So that's Now you also have to know what are the different return on investment for different strategies, you should have actually worked on that. You should have actually done at least paper trading, if not actual trading, right? What are the return that I get? For example, my own understanding that if you sell index option, the returns are much better than if you sell stock option. Yeah. Similarly, if you buy stock option, returns are much better than buying the index option, right? So these are the things that you should know. And some of the strategy you have to select yourself, because it depends on your personality also. For example, some people are very good at buying option and they remain comfortable, cool and calm, which I can never ever do in my life. The point here is that, if I start buying an option, suppose I bought something at 60 rupees, it fluctuates to 40 rupees, goes to what stop loss I keep? I am confused on that. Because what happens is once you bought at 60 rupees, it may touch 40 rupees, it may touch 30 rupees, but it can go and bounce back to 110 rupees also. And it fluctuates so fast that it's very difficult to make a decision on this. So what I do is I actually sell the option. I don't buy the option. So it's my preference. So somebody may be very cool and comfortable that I don't care if I lose 2% of capital, but I am going to make a big thing. So sometimes there's a great opportunity. And let me give you a classic example. Just 3 or 4 weeks before, Nifty was trading at around 10,700 or something. Okay, sorry, 10,700. Now I actually bought 10,800 put at a price of 45 rupees. And because it was fluctuating so much, I got rid of it at 57 rupees or something. It was a big volume. But the fact is that it was so fluctuating, I was not comfortable. And I got rid of it. You'll be surprised, the price went to as high as 185 rupees. Right? So, but then it's not my cup of tea. Right? I cannot wait for such a loss. I can't see the loss because I'm continuously monitoring my trades, ongoing active trade management. So it depends on your personality, which strategy you want to really opt for. That's a choice of strategy you have to make. Plan the trade, trade the plan. Probably you would have heard this, right? But this is the most critical component of your trading cycle. What do you mean by plan the trade? When the market is ended on a previous day, you actually study what happened to the market. You find out which stocks I will like to shortlist to trade, or you will find out what should I do next day. So your plan is ready in terms of when I will enter, at what price level I'll enter, what will be my stop loss. Why do you put a stop loss? To protect the profit, to protect the capital, right? You put a stop loss. So you decide on that. You also decide what will be my target. What is my first target or the bare minimum target? What is my optimistic target? That you decide. You also decide that when I get out, even though stop loss not met, when I get out, those things are there, maybe documented or in mind, but they have to be in plan. Not necessarily everything you document, but it could be there in your mind. So these are the important things. So, and also you define that the risk reward, I want to enter only the risk reward that I see, that if I enter into the trade, I may make a loss of 20,000 rupees, but there is a probability of making what you call 60,000 rupees profit. So let me take the trade. So that thing is part of your plan the trade, trade the plan. Then also you have to decide on number of contract or share or what you call position sizing in the plan the trade. That's very important. But how much you want to commit? Typically I suggest that if your capital is X, don't commit more than 1/3 at the first go, right? Even though it's profitable, okay? You will always find opportunities later on to really add to more to your even profitable position. And you also have to decide not only the price-wise stop loss. The price-wise stop loss means suppose I bought a Nifty future at 10,700, and then I decide that if it goes below 10,650, I will get rid of my position. I will book the loss and I'll get out. That is what you decide. But at the same time, you also decide time-wise. This has to happen within 3 days, 4 days, 5 days, whatever is your outlook that you have to define. Because sometimes what happens, your capital otherwise lying idle, doing nothing. If just Nifty moves here and there, your capital is doing nothing. You are missing out some other strategy which are very good strategy in the market. So you also have to have what you call a time-wise stop loss. Now, what I typically do is, when I monitor the screen, when I'm in profit or loss, what it is, I actually see what is happening to the profit and loss. And that gives a great insight. So if your profits, for example, you started the first trade, you say it's shown a loss of 2,000 rupees. Right? The first screen shows loss of 2,000. Suddenly it went up to 4,000 profit. It came down to say 1,000 loss again and went to 6,000 profit. So I make up in my mind the chart of the profit itself or the loss itself. I just find out what is the chart, what the profit chart is telling me. It's built up in the mind. There is no graphical software which will show you. But if my profit itself is in uptrend, then I retain that profit. But moment I find that it's getting into sideways movement and otherwise getting into downturn. So for example, if my initial profit that I started trade was 2,000 loss, but it became 24,000 profit, for example, right? Then again suddenly it started making 20,000 profit. Then it became 22,000 profit. Then 17,000 profit. Again 20,000 profit. So actually it is in downtrend. So I would rather get rid of my position. So this is the point that I'm making. The fluctuation of profit itself gives an insight for you to find out what you should do with that trade. Now sometimes you make a mistakes in your previous day analysis. The target may be too ambitious, too conservative, what it is. So that you have to monitor. And the most important thing in the trade plan, plan the trade and trade the plan, and the active trade management go hand to hand, right? Both of the things go together. So what you do is actually you then see whether your target which was placed is realistic. What is the market message that I'm getting, right? Is it that my analysis, that previous day analysis is correct or not? If the market is giving contradictory signal than my previous analysis, you should get out of the trade. And once you are in profit, as I told you that I myself see the profit whether it is an uptrend or not. Sometimes you have to protect the profit. So example, if you found that your profit has jumped to say from 2,000 loss, you have jumped to 20,000 profit, and your risk is 20,000, for example, you plan the risk stop loss at 20,000 rupees loss. Now the profit has gone to, let's say, from 20,000 to 30,000 rupees. The first thing that you can do is to put a break-even level of your stop loss. So you can move the stop loss to break-even level, which is the 20,000. Your risk versus reward will become 1-to-1, which I call it break-even. So I'll make sure that I at least earn 20,000 profit. So I'll put a stop loss there. Again, depends on market situation. It is not necessarily this can be done blindly all the time. No. If the market is too much gyration, you have to actually give credence to that particular part also. Now, why it is so difficult to put a stop loss? I know this is a problem with everybody else, right? It is extremely difficult to put a stop loss. Why it is so? Anybody? Why it is difficult to put a stop loss?
Cannot digest the loss.
Very good. Anybody else?
Because we are expecting some profit from it, not loss from it.
Absolutely, that's absolutely right. So we have very good learned audience here. Very good. What else? Anybody else? One person said because we expected to make a profit only, not loss. That's why it's very difficult.
The experience, the stop loss, khawai jai se.
So what is saying is stop loss once you put, you are sure that it will be eaten away. So means you will make loss. Right? Now let me comment on some of the things that they commented. Let me begin with him. He says stop loss khawai jai se, right? That means you're not defined the stop loss scientifically. If the stop loss khawai jai se, if the stop loss is met, thanks the market. It has protected your profit. Don't believe that stop loss is something bad for you, right? Now the most important plan, as he said, that you have in your mind set up that when I trade, I can only make profit. That's the mindset we have. Most of the people we have. No, the very fact that this is, despite all the technical skills, knowledge, there is no pattern in technical today which gives a guarantee that this will behave this way. Right? No pattern gives that guarantee. What it means, it can have high probability. It's a 90% chances are there that this will give this kind of profit. But it cannot say 100% chance. It may say near 100%, but cannot say 100%. No pattern in technical analysis guarantees any kind of behavior, market behavior, right? So what it means that every trade that I take, there is a chance that I may be wrong. And because I may be wrong, I have to actually ensure that my capital is protected, and that's why I have to have a stop loss. But somebody said in the backside that, it is very important, it's a human psychology. Like suppose in a cricket match, the captain of Australia and Dhoni, our Virat Kohli just put the toss, and Virat Kohli lost the toss, let's say. So can he say that because I lost the toss, now what happened there, I'm most likely to lose the match? Can he say in the interview, in the beginning interview that they take? They cannot take it. They cannot say that. Maybe he may be believing that way internally, that when I have lost the toss, the game is actually I have lost. But still he can't say that. So one of the primary things why we have A problem in putting stop loss is that we have to accept the defeat upfront, and that our mindset does not allow that. Why it is difficult to put a stop loss? Because we are accepting our defeat upfront, right? And we as a mindset, we say, oh, how can I be defeated, right? And that is the main problem. So the solution to that is, the market is supreme. I'm a learner to the market. I'm nobody in the market. Market is supreme, market is right. Whosoever is wrong, it is me who can be wrong. If you believe this, and if you believe that profit and losses are part and parcel of my trading game plan, my trading business, then you will not have this as a problem. So this kind of conviction is so important to really put a stop loss. And also believe, don't look stoppers like this gentleman said that, stop loss मेरा खवाया जाता है. So point ये है कि it is your friend, it is not your enemy. Treat it as a friend, not as an enemy. That's very important. So those mindset you need to build up. That's very important. Now, when you plan the trade and trade the plan, there is also sometimes very difficult to do what you call a very detailed analysis. So what you typically do is your expected value in your mindset. So when I do, for example, मेरा profit होने का chance है, I think मैं 10,000 का profit बनाऊंगा, but मुझे लगता है उसका chance 50% है, right? और मेरा loss 5,000 होगा, उसका chance मुझे लगता है कि 50% ही उसका भी है. Then shall I take that trade or not? Right? No. Why not? Anybody? Based on? Based on individual, okay? No. So I'll tell you, there is something called as expected value. Let's go to the second here. The concept of expected value. For example, your probability of making loss is 20,000. You're likely to make a loss of 20,000, and the probability of that, this is all, there is no science which tells you this is a probability. This is all your gut feel. You're thinking based on experience and you being in the market. And you say that probability is 50%. So what is the expected, their value is minus 10,000. Then the second, you have first target in mind, which is a 40,000 profit. The probability of that is 30%, let's say. This is all mind. So expected value is 1,200. And the second target, the ambitious target is 60,000 rupees. The probability is 20%. The expected value is 12,000. Total expected value is 14,000. Overall expected value is 14. When the expected value is greater than 0, it's a trade worthwhile taking. That's very important. Expected value is more than, so what happens, for example, if you go to a casino, right? When you play on roulette, the expected value of your game is always less than 0. And that's why you always lose in casino. The probability, the setup is such that you are most likely to lose. The reason is expected value is less than 0. So if you say if you put $10 and you're likely to, one of the winning game could be $1,000, but the chances of getting $1,000 is 0.01%. So what is the expected value? 0.01 divided by 100 into 1,000, which is how much? It's a negligible amount. So your expected value overall is very, very low. Now let's take the other example. Here. This is a trade where my the profit is 10,000 rupees loss I can make. The probability of that is 50%. My first target 5,000, second target 10,000, a different probability there I have indicated. This is not a profit worth taking because the expected value here is negative, right? And why we saying 1/3 ratio, risk ratio? You can have 1/3 or 1/2, that is fine. If you take X amount of risk, your profit should be at least 2X or 3X. That is your call, which one you want to take. But let's take the other example here. If you have risk reward of 1/3, the expected value will always be more than 0. Like you see the expected value when risk reward is 1/3. Let's assume that your target probability is 50%, another your loss making probability is also 50%. But your target is 60,000, so your expected value is 30,000. Your expected value for loss is minus 10,000. Overall you are gaining 20,000. So when you play a risk reward 1/2 or 1/3, basically your expected value is about 0. And that's why you can make, that's why everybody tells you that you should play with high risk reward. That's very important aspect. I was telling you about make trading as boring as possible. Right? trading is a monotonous process-driven approach. It is never exciting. It is never exciting. You have to actually behave in a particular fashion, in a particular methodology, and you have to really ruthlessly follow it. You cannot deviate from it. If you try to deviate from it, you will have issues and problems, right? So it's basically, when we do this, when we set the goal, when we define the our vision and mission and all that, and our trading capital and our rules of the game, then we have actually achieved some sort of a commitment to make the trading boring, because we will actually do like this. We will not do something new. We'll do something which is already defined. So when something is defined, is done, it's all boring, right? When the excitement there, when something surprises that. In trading, you should not get surprised. In fact, the minimum surprise in trading, it is better for you. So trading has to be extremely boring in that sense. It's a monotonous, right? Small losses are part and parcel of trading. So there is nobody who has done 100% profit all the time. It's a fallacy. That's not possible. There's nobody in the world who can do that, right? Be saint-like. A saint treats a murderer and another gentleman equally. He doesn't care that this guy is a murderer. He treats both of them equally. So treat losses and profit equally. Try to learn from both, from profit also and losses also. For example, from loss, you can say what went wrong. Where my planning was wrong, my entry point was wrong, my target was wrong, my loss was wrong. What was wrong? Like he said, loss khawa jata hai. The point here is that maybe the stop loss that you put was wrong. The trade itself is not taken, and you have taken the trade. That's a mistake you committed. So all those things you should learn. By sticking to trade the plan only, a disciplined approach, you overcome what you call fear of missing out. Most of us have the fear of missing out, right? That मैं रह जाऊंगा, market ऊपर चला जाएगा. If I don't do trading, I will lose profit. You will make profit only if there is a profitable opportunity. So don't be just jump in the market. You have to be sure that I will make profit, then only jump in the market. Get rid of FOMO, fear of missing out. It's not there. The fear of missing out will get out of you when you actually treat trading as a business and as per the complete framework I given to you. So half of your job, more than half of your job is done on that front. Now other thing is that our human being, we seems to be doing something, as if doing nothing is a guilt. If you don't do anything, you feel guilty, right? Oh, I have not done anything yet, right? So that guilt is there within us. That seems to be you seems to be doing something, and so trading sometimes is doing nothing because there are no opportunities. The opportunities which are there are highly risk oriented, and I don't want to carry out those capture those opportunities, right? The risk reward is not favorable. So doing nothing is something very important that you should have mindset, and that's why trading is in that sense is extremely boring. Right now, the next statement: would you attempt to fly kite when there is no wind? It's meaningless. I'd been doing this when I was a child because I was crazy about kite flying. At the end, 2 hours also I'll spend, but I'll make sure that kite goes at least 100 meters far away. And in the process, I got exhausted all the time. And when wind comes, I have no energy to enjoy. So those things are happening. So when opportunity comes, you will be frustrated because of a lot of things that you've done at a wrong time and wrong way. Which Google route you will take? The one which is conjunction or the one which is free flowing, right? So keep this statement in mind. You will not have problems in terms of doing the trading. Now, very important thing. P.V. Narasimha Rao, our prime ministers, right, 1990s, had made one statement which I like the most. He says, not taking a decision also a decision. Right? If I don't take a decision, it's my decision that I'm not taking any decision. So in trading, it is extremely relevant. If I don't take a decision, it is a decision itself.
To add, I think somebody says no trade is also a trade.
Yeah, okay. No trade is also trading. And doing nothing is an action chosen. If I have decided I will not do anything, it's an action which I have chosen, right? So don't feel guilty that I'm not doing anything. You're not doing anything for your good only. So the trading, when you make boring, all these are aspects which you have to keep in mind. And easier said than done, all this, right? So I know that it's very easier said than done. I'm telling you here, myself sometimes I do indulge into over trading despite so many years experience. Then you realize, but because we are well experienced, we kind of get rid of at a small loss. Okay. Trade management, active trade management is very important. Monitor your trade, what is happening, whether your profit is in uptrend, whether there are other opportunities that you have. Suppose your trade is in profitable position, you can think of other trade which are actually for sure to make profit. Sometimes have you heard about hedging? If I am in a profit, I hedge and I actually make more profit than that. So my current profit is guaranteed, and top of that I make more profit. So those things you can do in trade management. Now, very important thing, when you trade, keep in mind that you need to only 2 positions out of 3. One position that if you are doing only one trade, then your trade is either in profit or in loss. Now, if it is in profit, then you know that your either trailing stop loss is in place or your original stop loss in place, and you are actively managing a trade to make stop loss, what you call staggered stop loss, right? That you do, right, based on the market behavior. There is no standard formula on this, so that you do. If your current trading is actually in loss, then your stop loss is in place, so don't do anything, just end of it. And now suppose you have a bespoke trading, which is the option strategy, that your own strategy, where profit and loss are known in advance, and irrespective of market condition, nothing is going to happen. For example, somebody would buy 27,800 Bank Nifty put and sell 20,600 Bank Nifty put. The profit and loss are known in advance, and irrespective of what happens to the market, that will remain as it is. So in those strategies, nothing to be done. Money management. Money management decides on the positioning of your sizing of the trade. So how much trade I should take. Let me tell you some of the great examples. For example, in a week, suppose I made a 60,000 rupees worth of profit. Right? Now I have an opportunity where I can buy a put at 4 rupees. If I buy put, the probability of the 4 rupees becoming 0 is, let's say, 90%. That will become 0 most likely. But there is a 10% chance that this 4 rupees can become 150 rupees or 100 rupees. There is a chance. So now what if I buy 1,000 shares, what will happen? I will lose 4,000 rupees maximum. I already earned 60,000 rupees in the given week, right? And now what I can do, I can take that trade. So what I do, I can forego my 4,000 rupees, but there is a possibility that I am 150. If you look at expected value there, the 150 multiplied by 10% is 15,000, and what you are losing is 4,000. So the expected value there is very high. So you can take such trades. Okay. So that's why the money management gives you this kind of opportunity. When you are money management, right? Now see another example which I have given here, that Nifty is currently at 10,700, and your stop loss is 10,600. So what you can do, suppose you bought 200 shares, because your maximum loss that you can afford is 20,000. So you can buy only 200 shares. But if I wait for the Nifty to come to the lower level up to 10,620, I can still keep the 10,600 as a stop loss. I can buy 1,000 shares. But because of my limited capital of 10 lakh, I can only buy 800 shares. But then the profit potential is very high. Just you see the risk reward. In the first case, is a 2 by 3, which is 1 by 1.5, and second is 2 by 5 roughly, 1 by 5, sorry. So the first trade should not have been taken in the very first place, right? But then here is an opportunity. The money management tells you what is the position sizing should be. Trade recording and operation review. Anything that you do, you need to keep a record of it. You might argue that the broker keeps the record. Broker does not keep the record for your what you call strategy-wise profit and loss. Broker does not keep a record of your return on investment for each strategy. Broker does not keep record for your different time frame strategy you have in place, whether monthly or 6 monthly or weekly or daily. Broker does not keep that kind of profit and loss for you. So you need to record that. And some of the parameters which are given here, these are very important. Maximum profit should be more than maximum absolute. Average profit should be more than average absolute loss. So these are your achievement you should keep in mind. These are very important. This kind of you should measure this after recording, that are you really achieving this to achieve your vision. If you achieve this, then only you'll be able to achieve vision. Now this should be achieved at both, at the overall level, at the trade cycle level, at the strategy level, at the instrument level. So for example, somebody is doing stock trading, future trading. So whether he's earning in Reliance or he's earning in ITC, he's earning where, he should know that where I am making maximum profit. So all that aspects are very important. So trade recording. and looping the feedback. Learn from every trade, find out, analyze what went wrong, what went right. One of the important insight that you get from profitable trade is that had I made the optimum possible profit, market could have given me 1 lakh profit, but I have booked at 20,000. Why it is so? You can even learn from there. You can learn from loss-making profit also. That's very important. So from profitable trade to loss-making trade, everything they can learn. Now, very important aspect, like as I told you, when I go into trade, I monitor my profit, whether it's a profit or loss, whether it is an uptrend. Similarly, your capital, the trading capital that you begin with 10 lakh, 20 lakh, 1 crore, whatever it is, that trading capital also should be in uptrend. As time passes by, your trading capital should be in uptrend. If your trading capital is like this, there is no consistency. Like your graph should be your trading capital graph. It can go down, can come, but should not further go down from the previous low. And it should continue to go up. Trading capital should continue to go up. It's like, so if you know technical analysis, just keep a graph of a trading capital also in your mind. That's very important. Now, any point in time, for example, for a review period, like all of you know Fibonacci levels, right? 78.2% Fibonacci level, if it breaks from the previous wave, the trend is actually defeated. The trend is actually getting reversed, most likely to reverse, right? So if you make, so previous month, for example, you made 10 lakh rupees profit, and this month you lost 9 lakh rupees profit, your uptrend which was there is likely to be reversed. So don't lose more than 78.2% of profit which you made in the previous cycle. That's very important. Keep based on Fibonacci levels in the mind. Okay, and these are some of the key refreshers that you learn, and you can read through them. Two important things I want to say here. Always respect the market. Market is always right. Even if you made 20% profit in 1 month, still be humble to the market. Don't you think, like Jay said, that market meri mutti mein hai. Never ever say that. Market has all ability to surprise you. And market does not care about your position. On a 1 crore rupees capital, you made a loss of 60 lakh rupees. Market will still make you more loss. It is not a socialist mindset. Or on a 1 crore capital, you made profit of 2 crore rupees. Market will say, ये बंदे ने बहुत कमा लिया, उसके पास थोड़ा पैसा ले लेते हैं. Market does not care. He will probably give you more. So it does not have a socialist mindset. Keep that in mind. Market is right. Keep the market fundamentally in picture, right? So don't take panga with market. Dance to the tune of market. The way market is behaving, just you behave the way. If the market is on uptrend, don't try to sell. Don't drive the wrong way. Very important, right? Now, the way I began about my discussion about Jayesh and Amit's story. Anybody like to say what Jayesh should have responded? Maureen, you like to say how Jayesh should respond? Gujarati में बोलो, कहीं वांधो नहीं. Jayesh શું કેવું જોઈએ તું? સાંભળ્યું તું? નહોતું સાંભળ્યું. Okay. Anybody else? How Jayesh को क्या कहना चाहिए था? जस्ट अमित ने बोला कि यार तुम वंडर, जयेश ने बोला था यार अभी तुम देखो अभी तो बैंकॉक चलेंगे और देखो कितना प्रॉफिट कमाता. What ideally, what should be the response of Jayesh? Anybody want to take that?
Story I don't remember. If you can repeat again.
No, it's okay. So the story was like that. Jayesh has made on 10 lakh, 2.5 lakh rupees profit. Amit, his close friend, comes in and tells him, oh great यार तू मेरा बंदा है, इतना अच्छा कमाया, बहुत अच्छा तुमने कमाया, मैं बहुत खुश हो गया. Right? This Jayesh was feeling very good about his successes. तो उसने अमित को क्या बोला, अभी देख क्या होता है, अभी तो मार्केट मेरी मुट्ठी में है, अभी तो मैं बहुत कमाऊंगा, हम लोग बड़ी बड़ी पार्टी करेंगे और बैंकॉक भी जाएंगे. ये स्टोरी है. And this response, and I said that this is the most indisciplined, immature response Jayesh has given. So what should have been the right response of Jayesh at that point in time, assuming he is an indisciplined and mature trader? Please.
He should have said that good you have made money.
No, Jayesh is saying to Amit.
The person whom he gave feedback, so that person what he should answer?
No. Jayesh should answer to Amit. Amit is praising Jayesh कि आपने बहुत कमा लिया पैसा, and Jayesh is feeling very proudy and say अभी तो मैं और कमाऊंगा, अभी तो मार्केट मेरी मुट्ठी में, अभी तो देखो आगे क्या था, हम बैंकॉक साथ में चलेंगे. right? So Jayesh is responding like that. So what should be right response of Jayesh?
I right from that angle.
Yeah, anybody else? Yeah, please.
They should tell that profit સારો કર્યો છે પણ અમુક મિસ્ટેક પણ થઈ ગઈ ને I learned from this mistake.
Absolutely
I
right.
tried to
Absolutely right. That's a great response. That's correct. Market is right, not I am. I made a profit because I behaved that way, but it is no guarantee. I will try to make better profit, but it is no guarantee. Market always has a surprise for me, and the given that I made this kind of profit is no guarantee. I may make more, I may lose. I do not know, and I cannot be proud or cannot be saying that I'll make market मेरी मुट्ठी में. If you make that statement, market will teach you a lesson. Yeah, put a slap. So, ladies and gentlemen, with that, I come to the end of my today's evening talk. You had been very august gathering here, very good, learned audience here. It was evening well spent for me, and I thank you very much for your time.
Well, I am one of those non-technical persons in this audience, and me talking of technical and non-technical is going to surprise you, because what I have learned as a takeaway is what I will share with you. Well, Hitendra bhai has shared that having a vision, a mission, a goal is the most important aspect that one must keep in mind when we are in the stock market. Planning a trade and then executing that trade is what is very, very important. Technical analysis is important, and yes, very important, but keeping in mind the non-technical aspects is probably more important than the technical aspects. He shared very importantly that be aware of what is happening, otherwise beware. If you want to win in the market, don't boast. Have a stop loss put so that you know your limits. Sir, if I must say, thank you very much for this insightful talk of yours. I am sure all those who are here have enjoyed listening to your technical aspects as well as the non-technical aspects. They have listened to you with rapt attention. I am sure a lot of them will have a lot of questions, but that question answer session can happen after we bid farewell to sir. And on behalf of all of you, as also Ahmedabad Management Association, I would like to thank Hitendra sir with a token of our love and appreciation. Sir,
Thank you, Professor.
Thank you very much
Thank you,
for
Ahmedabad
this.
Management Association. Thank you. It's my pleasure as well.
thank you very much. Have a great evening and good day to all of you.